Hey guys, happy Friday. Man, what a week, huh? So here we are at the end of it, and the market's decided today to just sort of settle in and do nothing. So we've been looking at this all day long. We've been, trade. We had some opening gaps; those were good. We did not have the Apple trade, so a bunch of people are always disappointed when that trade doesn't show up. And all I have to say to that is, it's a statistical process control, right? So that trade is based on certain things happening in a certain way, and if they don't, then there might be a different trade in Apple that you can do, but it's just not that particular arbitrage trade that we like to capitalize on. So the rest of the morning was characterized by some really choppy trading. So we haven't, if you've been in the room and you're watching this stuff, you saw those opening gaps. A couple people made some comments about them that they were very solid or very easy to spot because there were these setups that were more limited, let's say. On a day where there's 50 of them, it's really hard to filter through and figure out what you want to focus on. And my first inclination is always eliminate the banks, eliminate the oils, focus on some consumer cyclical stuff, consumer discretionary stuff, and sort of fan out from there into some of the names that some of the names that you're used to trading, things that you've been around before, how they behave. Go focus, drill down, look at the tape, look at who's making a market in something, look at where the spread is, look at the volume on the open, and that makes it a little easier to compress those days. On a day like today, though, where there's so few opening gaps, you can really just focus your attention on the things that are right in front of you, and it's not as hard to get in front of the opportunity and then capitalize on the opportunity. Now, that being said, like I said, it's been slow all day. It's been a choppy grind. We know that our friend John Conforti, right? Shout out to him because he managed to pull it out and overtraded his way into some profits. But for the rest of you, if you're in the room and you're listening to somebody who made 60, he doesn't mind me calling him out, 60 or 70 trades in order to generate the result. It's great to make some money, but it's also great to know what your strategy is in making it, not just chasing momentum, especially on a day where the momentum is kind of sketchy the way that it is today. So good for you, John. Glad that, glad you pulled it out even with all those trades. But, for next week, let's focus on doubling that profitability and cutting the number of trades in half. What do you say? All right, so let's go and take a look at the charts and see where we are here. You can see pretty clearly here what happened in the morning. We got into the market and had an inline open, right? So a very flat open coming into the trading session. And what's that tell you in terms of what to expect in the morning? Well, what it says is the opening gaps are going to be reliable because you're not counting on reversing some kind of momentum or going against a big market move in order to get in front of opportunity. What it also says, though, when things go and extend into the trading session and what you get is just this, which is just sort of a chop around in the prior session's closing range. You can see it better down here maybe. It just didn't have the legs to really get going and do anything. But that's all right, right? So then the thing to do is sit on your hands. I've had so many people today asking me, well, what about this stock? What about this stock? What should I do next? And the reality is I just haven't had many trades at all on my side, to shoot any trades at all on my side in these Magnificent Seven stocks. Sometimes it's just really important, to look at this stuff and say, if there's not really opportunity right now, then it's okay to not go and get into positions. And well, there you go. He's popping up on our screen there. Now he's got an $1,152 profit with these trades. It's all right, right? Like I said, it's okay for people to to find the little shots in the dark here. But what you have to focus on is just staying on the right side of the trend. So that being said, you've got, Microsoft, which is coming down into this pivot level. So right around that 405.85, just up above there, you can see we've got confluence between the anchored volume weighted average price, all of this volume by price, cluster analysis data over here. So everything looks good in terms of sort of staying above the line. as long as, you know, this guy and this guy here, the spiders and the Qs, or the ES and the NQ, you know, manage to stay in positive territory. My guess is that if they sink below the lines, right, so on the triple Q 531.57, on the QQQ, we don't want to see really anything that gets below, hang on a second here, you know, sort of below, yeah, about 499.40 probably. You know, if it breaks down through there, then some of these other ranges are going to get questionable. If you're watching things and looking for opportunities on the long side of the market, I would say let's keep an eye on the spider and see, you know, do we get down into this level right here, or do we break up above this level right here? Those are both places that I would look at for, you know, moves that might get us a long side move on the ES or the NQ. So if we get inflections in these ranges here, right, these boxes, then good probability that we're going to have some, you know, some setups that we can work with going into the final hour here of trading. As for the rest of it, let's look at Amazon. So Amazon is in the range, right? So it's coming down into this 166.53 level. So this threshold right here, as the markets inflect, as the markets bounce a little bit, that's got room to the upside. Probably not all the way up to that pivot line, maybe just shy of 167.47, but about 80 cents or 90 cents worth of range on that one going into the closing bell here. And then we already talked about Microsoft, NVIDIA. This is where, you know, our friend has been making his 1,000 trades, but, you know, has managed to stay profitable. And really the profits, the substantial profits have come from moves from this line higher, or from this infield fly move up here. So if you're a fan of my book, if you're a fan of Around the Horn, then you know what an infield fly setup is. Let's see if we can maybe zoom in on this a little bit here and show you. Okay, so we've got a, you know, we've got this bar up here that forms an infield fly right up at resistance. So that's an exhaustion reversal pattern. And when you get those patterns, it, especially on a day where the market's just sort of sideways, you know, you can take this and figure out that if we get down below 105.43, that you've got a real good shot at getting down into 104.59. So kudos, you know, if you caught that in one of your 60 trades, that's fantastic. It is, you know, not always the easiest thing to do. People have a hard time going both directions in a market. So it makes it sort of difficult trading because you have to re-gear your thinking. You know, if I'm at the top here, I'm looking for a short. If I'm at the bottom here, I'm looking for a long. And then what winds up happening is sometimes you're so focused on, you know, the fact that there was an infield fly on the stock that you were looking at that you didn't see that what was driving it were these infield flies on the major indices. So, you know, that's a powerful setup. It's a great setup. You know, but if you're not able to keep your eye on the ball, if you're not able to really focus on the why things are happening as opposed to just that they are happening, then the better bet is just to stick with the trend on the day and focus on the retracements into our support and resistance levels. So there you see it, right? We just bounced on that spider level. So spider 531.57 up to 532.24, right? That's about 70 cents per share. You just go out, if you're doing 1,000 shares on the SPY, that's roughly equivalent to, but maybe more like 700 shares on the SPY is roughly equivalent to one contract on the ES. So you can do the math there and figure out where you would be. But, you know, all of these things are doing sort of what we would expect them to do earlier in the day on a weekday, late in the day on a Friday. So, you know, it's always summertime Fridays are always, you know, people are looking not to be sitting at their computers. They're looking to start a weekend. They're looking to do something other than trade. But if you stay focused, okay, we just had again now. So now the move in Microsoft happened while I was talking, right? So you got in at that baseline right above that pivot. And you had the opportunity here for, like I said, only about 50 cents, but it's still worth doing. It's still worth looking at. You see the logic, you see the reason that you're doing things. You're not trying to fight the trend. What you're focusing on is the fact that, all day we've been flat, and after flat we did this, and then we did this, and those pullbacks are to threshold levels. You got a 382 pullback on a Fibonacci basis. I don't have the fibs drawn there, but trust me, that's 38.2% pullback. You're pulling right back into the volume weighted average price. You're pulling back into confluence with a pivot line, and you're pulling back into confluence with the volume by price cluster analysis. So when everything lines up like that, it makes for a safer trade, makes it easier to find the opportunity going into the rest of the session. And with that said, I think for the rest of the session, that's exactly what we're going to do. We're just going to focus on what's been happening in the market in the particular stock. Focus on Amazon. I would say there's a bi-directional trade at this point in this box. If it gets up into the pivot line, preferably right above the pivot line, and then reverses lower, I'm going to look to take the trade on the way back down to that lower threshold at 166.53. On Microsoft, if we get back up into the top of the range here, going to look for another one of these infield fly setups. That was a really good trade on Microsoft there. You can see it. It's got it right where the market did. Right where the market did this dance, everything else did it too. So, look for the confluence. Don't just look for a trade. And in my case, if I see the confluence between the major indices and the stocks, and I see something like that infield fly pattern form, I'm going to go and look to try to get on the short side of the market. Meantime, NVIDIA, if we get down into that low 104.59 area, looking to go long there again. And, pretty much on all of these, I'm probably going to pass on Netflix. Netflix has been, a little bit loose around that confluence area. But, for the rest of these guys, I'm going to say passing on Apple. Too much price elasticity on the bottom there. Google, I would probably say that if we get into, this threshold right there, got a possible 163.16 long side trade. Problem's going to be that 163.43 level up above is going to be immediate resistance. So if you're looking to catch them when they're running, that's probably going to wind up being one that gets you in, gets you right back out again. And sometimes people aren't so good at taking small profits. They want to let them turn into big profits, and then instead they turn into scratch stops or break-even exits. All right, so I think that sums up the strategy going into the afternoon. I'm hoping that clears things up for you folks. And like I said, just don't overtrade. Try to stay, don't get in the way of your own profitability. Don't try to find things to trade. If you're confused, don't stay confused, right? Don't look at the chart and say there must be something to do. I'm at my desk and I'm just trying to figure out, a way into Netflix, a way into NVIDIA. If you have to figure out a way into it, then, you're rolling dice, you're gambling. If you see a very clear opportunity and you see a way to control the risk and you know exactly, look, it's been at this threshold level, boom, 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 it's once, twice, earlier in the session, now we're coming back in and we're hitting it again, then you've got a good reason to do something. You've got a good idea in front of you. Well, now what's the risk? What's the reversal damage going to be if it breaks through your level? What's the potential profitability? Don't just look for action, right? Because I'll tell you again, it's a lot cheaper to just go to Las Vegas and at least the drinks are free. But when you're sitting in front of your computer and you're trading, it's not about action, it's about logic. And you want to find a really logical way to get into and out of these positions. And as long as you know why you're doing it and you follow your plan, then chances are over time, your profitability is going to take care of itself. Don't look for, I can make a quick buck here. Look at it and say, is this the trade that I planned? And if it is, then I'm going to go and trade it according to that plan. That's the best advice that I can give you. Have a great weekend, and I will see everybody back here next time.